Hey, we are live. All right, it is Fact Friday, FAQ Friday, and every Friday I get on live Facebook, Instagram, LinkedIn, YouTube, and the goal is to get someone from the real estate world who's been doing it a while and just started doing it to tell you guys, as I say, get it straight from the horse's mouth. Like I always say, you can go on Google, you can type in stuff, you can have chat GPT, but there's nothing better than speaking to someone who do it on a day-to-day basis. And my guest today is Mr. Kelvin Martin. He is the senior loan officer at First Horizon Bank. And Kelvin is one of the first loan officers I used when I got into business a little bit over 4 years ago. And we've had a good relationship since. And it's always great working with him. He does a wonderful job. So, hey, Kelvin, if you want to just tell the folks a little bit about yourself, and then we'll jump into a few questions, and we'll try and make this as informative and educational for anybody who tune in as possible.
Okay, great. So thanks so much, Keno. I really appreciate this opportunity. I enjoy speaking to the public and speaking to our community about home ownership. I have a huge passion for that. I've been in the mortgage banking business since 1992. God has blessed me to help thousands of families across this entire United States to become homeowners. Whether it be first-time homeowners, whether it be investment properties, rental properties, properties that where they want to purchase Airbnb, basically any type of residential real estate, I've been able to facilitate ownership for customers across America for the past 32 to 33 years since 1992. So I enjoy what I do. I thank God that he placed me with this opportunity to do mortgage banking. I've absolutely loved it. Still love it to this day. I would not want to do anything else. And I just enjoy educating and helping people become homeowners, whether it's a 20-year-old or whether it's one of my customers. I think he was 78 purchasing his first home.
Wow.
So regardless of the age range or the income range, I just enjoy working with different customers to obtain home ownership.
Yeah, you mentioned that 78 is not his first home, but we and I just closed a deal, I think was a month and a half ago. And he was about to be 80 years old. I think he had just turned 80. You mean, Mr. Stout, remember that?
Oh yeah.
Just yeah. So you're never too old. You can be too young,
Never.
but you're never too old. Okay.
Yes.
But something Kelvin didn't tell you guys, and I'll let you know, he's also a veteran, and we want to thank him for his service. That is something that we should never take for granted, man. People who put their life on the line for this great country, especially somebody like myself who's a migrant and can enjoy this kind of stuff because of what people like you do. So thank you very much.
Thank you. I appreciate that.
All right. So let's jump into this. The first question I have, usually this is where it starts, especially when you're dealing with first-time home buyer. It always starts with credit. So the question is, how much weight does a buyer's credit score carry? And then the other part of that is, do lenders also look closely at credit history patterns? So for example, let's say there was a time when you had a bunch of late payments, but right now for the last year or 2 years, you haven't had any late payments. How much do they look at stuff like that?
Yeah, so very good question. When it comes to credit, it's like the key thing that opens the door in order for you to be eligible for consideration for approval. First Horizon Bank, our score is 620. So you have to have a 620 score in order for us just to consider you for approval. Doesn't mean you're going to be approved, but just to be considered. So with that being said, credit score is very, very important. I tell people bad credit is not a death sentence. Just because you have a certain score that's low, I promise you, it can always be turned around. You just have to be educated and informed on the
Right.
different avenues and different direction that you need to take to move the needle on your credit score. But the lenders are going to typically look at your Equifax score, your TransUnion score, and your Experian credit score. Most lenders are going to scratch out your lowest of the three, scratch out your highest of the three, and they're going to take the middle score. And that's the score that they will use for decision purposes. That's also the score that they use to determine what type of programs you qualify for. And it's also the score that they use to determine the level of interest rate that you receive. Customers with higher credit scores will typically receive a better rate than customers with the lower credit scores. So, with that being said, credit does weigh quite a bit when it comes to qualifying for buying a house and what your monthly payment is going to be, whether it's higher or lower, depending on your interest rate, depending on your credit score.
Okay, cool. Um, kind of stay on that a little bit. One of the things that I've learned and I've heard, and you can expand on this for someone, let's say, for example, a 25-year-old who's never had any credit. And by this, we mean there is nothing on their credit, is what we call a ghost, not bad credit, not no pay, nothing. What is the possibility of somebody like that getting buying a home? I heard there are ways to make that happen.
Yes, there are. Very good question, because you do have people, they just don't believe in credit. I had this young gentleman, well, I should say young, he's probably in his early 40s, but he worked at a movie theater and had been working at a movie theater for like 20 years. And he just never believed in credit. So, one thing I'm pleased about with First Horizon is we can use alternative credit to qualify you to purchase a home. You can use things like your car insurance bill, how well you've been paying your car insurance, your cell phone, different types of streaming services, different types of internet access, cable TV, MLGNW, any bill that you're paying alternatively, and you've been paying it on time for the past 12 to 24 months. We can use alternative credit as long as you have at least three sources that have been paid on time for at least 12 months. So that can be your rent history, your MLGNW history, your cell phone history, your car insurance history, your cable TV history, direct TV, streaming services, internet access, anything that you can show a payment history that you've been paying on time for 12 months. If you have three of those, we create this alternative credit file and we can still qualify you for home purchase. So I was fortunate enough, the gentleman that worked at the movie theater, I was fortunate enough to qualify him for approval and qualify him for grant money, down payment assistance grant funds as well.
Okay, cool. But just to clarify that you have to had never had any kind of credit. So you can't have like a
Yeah,
charge off
yeah.
or had a little credit card or anything. Got to be like baby credit pretty much. No credit at all.
Yeah,
Correct.
I always, that's a good point, Keno. I always point out there are two type of people that have no credit score. There's the type of person that has abused their credit,
Mhm.
and there's the type of person that has just never used credit. When
Right.
I reference alternative credit eligibility for you, I mean alternative credit for people that have never used credit or have no credit reporting with Equifax, TransUnion, and Experian. If you're a customer that has no credit score because you've abused your credit and you haven't been paying things on time, and Equifax, TransUnion, and Experian, they have no credit score for you, then no, you can't use alternative credit when you've abused regular credit. Alternative credit is for those people that have not had a history over the past 2 to 3 years of using credit at all.
Okay. Great. Next question I have is when it comes to income and job stability, um, how much obviously your income makes a difference because how much you make, but how much does the bank look at your job stability? For example, if somebody's been on a job for 20 years, that good stability compared to somebody who had in the last 5 years make good money, but has moved from place to place. keep jumping around. How does a lender look at stuff like that?
So almost every mortgage product, whether you're doing VA, USDA, FHA, Fannie Mae, and Freddie Mac conventional, they're going to require a 2-year employment history. Doesn't mean that you have to be on the same exact job for 2 years. You can have changed jobs, but as long as you've been working consistently for 2 years, that's one of the key caveats to qualifying for homeownership. Now, there's a curveball to that. If you've been in school, college educated, and you get a degree like, say, nursing, if you get a college degree in nursing and you've been working at Regional One Hospital for just 6 months, then I'm going to use your college time as part of your employment history, because you're what is considered to be a degreed professional. You're college degreed in a specific line of work, and because you are, I can use the portion of your school transcripts to verify your 2-year employment history. Now,
Okay.
when it comes to the approval process, most of the mortgage products, we have these underwriting approval engines that we run through the computer system. If the computer system sees that you've been on the job for 10 years, but you have a high debt ratio, they're going to give you some leeway because you've been on your job for 10 years and you have a high debt ratio. But if you've only been on your job for 2 years and you have a high debt ratio, the computer system's going to look at that and it's going to consider you as a high risk, and it may or may not approve you if you don't have any additional compensating factors.
Okay.
So your time of employment and your time of income does matter. Now, not everybody works a job. You have people that have child support, people that have alimony, people that have Social Security income, and even VA disability income for veterans. When it comes to those fixed incomes, they have to be continuing for the next 3 years in order for us to use them. So if the child support is going to continue for the next 3 years, we can use it. If your Social Security disability is going to continue, we can use it. If your VA disability check is going to continue for the next 3 years, we can use it. So any type of fixed income that you're getting on a monthly basis, a pension, anything, as long as it's going to continue for the next 3 years, we can use that income to qualify you as well. And this is above and beyond regular employment history.
Okay. So basically, when it comes to those kind of things, it matters a little bit how long you've had it. It matters much more how long you still gonna be receiving it to show that it will be part of your income going forward.
Correct. So those are two good key points. It matters how long you've been receiving it, and it matters how long you're going to continue to receive it. Those two things are very, very important because we want to see that your probability of paying your mortgage payment on time is related to your probability of maintaining employment and maintaining a constant stream of income to come into your household and to your family. If you don't have a consistent history of income coming into your home for the past 2 years, then unfortunately, just about every mortgage product, we're not able to move forward.
Okay, cool. All right. The big word we usually hear a lot, especially as real estate agents, is debt to income ratio. Um, Explain that. Let the folks know exactly when somebody says your debt to income is too high. What exactly are you talking about? And
Yeah,
what's basically if there is a way to fix it, what's the best way to fix it?
yeah, sure. So debt ratio, this is how I want you to look at debt ratio. We're going to take your monthly gross income. Now, when I say gross, that's before they take out anything. Medicare, FICA, 401k. We're looking at your gross monthly income. And then we're going to look at the monthly payments of your bills that you have only on your credit report. We don't look at things like MLGNW, cell phone, car insurance. We don't look at those bills when it comes to qualifying you and when it comes to your debt ratio. So if you look at your credit report and you have monthly bills with Capital One, Credit One, you have a car note, you have furniture bill, we're looking at the monthly bill because you're going to have a monthly mortgage payment. So I want you to key into this. Your monthly gross income compared to the monthly bills on your credit report is going to help us determine how much monthly mortgage payment you can afford. Everything is monthly. So debt ratio is going to be a certain percentage of your monthly gross income. Fannie Mae and Freddie Mac conventional mortgage products, they typically let you do 50% or lower of your monthly gross income. So when I say 50%, your mortgage payment and any other bills that you have, car note, credit card, whatever, all of that must be under 50% of your gross monthly income. They will not let you have more debt than 50% of your gross monthly income. Now, FHA, which stands for the Federal Housing Administration, they will let you go up to 56% of your monthly gross income. So a lot of times when someone has a high debt ratio, I may shift them over to an FHA mortgage product versus a conventional product because FHA has more leniency on the debt ratio. They go up to 56%. However, FHA will add 1.75% of the loan amount to your loan for going up to that 56%. So FHA, all FHA mortgages, they have something called mortgage insurance premium, and the mortgage insurance premium is 1.75% added to your loan amount. Fannie Mae and Freddie Mac conventional loans, they don't have that. They have a monthly payment, but they don't have a lump sum that's added to the loan amount. FHA has a lump sum and a monthly. So you got to pay a little bit extra to get more leniency on your debt ratio. That's why I encourage customers when you're getting ready to buy a home, you can have debt because it's going to continue to move the needle on your credit score. You just don't want your debt to be high on the monthly payments that you're paying compared to your monthly income.
Okay, cool. So if somebody's debt ratio is really high, what are some of the quickest ways they can, if possible, resolve that?
So if your debt ratio is high, um, there's several things you can do. First thing, you can find ways to increase your income. If you can get a increase on your job, your employment, that's going to help your debt ratio. Other things, of course, the simple thing is, paying down your debt as much as possible so that the monthly payment can be reduced. Because remember, we're looking at that monthly payment. If you have ways of getting your creditor to offer you a better interest rate because you've improved your credit to get that monthly payment lowered, that will help as well. When it comes to debt ratio, it's just, pretty much cut and dry. The lower the monthly debt that you have, the more house that you can qualify for. I have a lot of clients, they make great money. I mean, $200,000, $300,000 a year. But if they have a lot of debt, it's going to limit how much home they can qualify for. I once had a customer that had $3,600 a month in car notes. And that limited the amount of home that they could qualify to purchase because those car notes was eating up the monthly income, which
Right.
means there wasn't a lot of monthly income left for a mortgage payment. So you do want to minimize your monthly debt as much as possible by lowering the interest rate on the debt, paying the debt down. It's all types of things you can do. If you get those credit card offers in the mail that offer 0% for 18 months, take advantage of that. Transfer the high interest debt over to the credit card at 0%. That way, every time you make a payment, it's going all to the principal, and hopefully you can pay the debt off in 18 months. But you want
Okay.
to exercise paying your debt off as quickly and as much as possible because it's just going to open the door for you to qualify for a better priced home, and it's going to open the door for you to qualify for grant money and grant programs. Because most of the grant programs, whether it be the city of Memphis or First Horizon, we have our own grant. All of our grant programs have a limit on the debt ratio, which is typically 45%. So you want to minimize your debt so you can get the best interest rate, you can get more house, and so that you can just qualify for what you actually want when it comes to home ownership.
Okay, cool. Um, how does bank look at money in the bank? Put it that way. So, for example, if you have a lot of cash in the bank, or you have like a big 401k, stuff like that, the bank look at that in a favorable way and might approve somebody because of stuff like that compared to they did not have as much.
Yeah, very, very good point, Keno, because when it comes to assets and reserves, whether it be your 401k, mutual funds, money in checking, money in savings, money in a CD, money in an IRA, money in an annuity, money in a money market account, basically what you're telling the bank is, I have emergency money in case you were to lose your job and you still have this mortgage, you still have this house payment. You're telling the bank, hey, look, I have emergency money. And when you tell the bank that you have emergency money, that bodes well for you and your probability to be approved, especially if you have a high debt ratio. Look at it this way. If someone has a high debt ratio and they have no emergency money in their checking, savings, 401k, mutual funds, or anything, all it takes is one shoe to drop and they can no longer make their mortgage payment. I
Right.
have a saying that I tell all my clients: it's 365 days in a year. It's not going to be blue skies and sunny skies and no clouds for 365 days. You're going to have a rainy day. That's just how life is. You're going to have a rainy day, and because of those rainy days in your life, in your financial life, you need to have some form of emergency money, preferably when it comes to home ownership. Even if you just have two house payments saved up, that's it. It helps your chances for approval, especially for those customers that have a high debt ratio and those customers that have a marginal credit score. So yes, assets and reserves are definitely very, very important.
Okay, cool. Perfect. All right, got about two more questions for you. The next one is somebody listening to this now or later on is thinking about buying a home, first time home buyer, not sure where to start, what to do. What would be some of the things you'll tell them to do over the next 3 months or so to put themselves in a really good position, um, to make sure that they can qualify for the best mortgage product possible?
Sure, sure. So I like the questions that you've kind of highlighted, Keno, because you basically speak on the four pillars. And I use this all the time when it comes to customers. And I say there are four pillars in buying a home. The first pillar is your credit score. The second pillar is your income and employment history. The third pillar is your debt ratio. And the fourth pillar is your assets and reserves, any money you have saved up. So if you're strong in all four of these areas, I promise you, you'll be fine when it comes to buying a home, and you'll be fine when it comes to, getting grant money, down payment assistance, and also getting a good interest rate. You want to be good in your credit score. You want to be strong in your employment history and income. You want to be good on lowering your debt ratio, and you want to have some form of assets and reserves. If you're strong in all four of those areas, you have like a 95% or more, 95% chance of getting a mortgage approval. There's some things we can't overcome. Like if you had a foreclosure, you have to wait 3 years before you can buy a house. So even if you got good credit, got debt ratio and all that, because you have a foreclosure, you got to wait 3 years. If you had a bankruptcy, sometimes you have to wait because of that. So there's some things that we can't get past. Simple things like IRS tax debt. If you have an IRS tax bill, you have to show proof that you've paid that bill on time for 3 months before you can buy a house. And I've had customers come to me and say, hey, Kelvin, I'll just pay 3 months in advance. No, it doesn't work like that. They have to see where you paid 3 monthly payments on your IRS tax debt in order for you to qualify. But generally speaking, if you're strong with your credit score, you want to work on that because credit score is going to give you a more favorable interest rate. And ways to work on your credit score, things like paying down your debt. And you'd be surprised about this one. Call your credit card companies and ask them to increase your limit. It doesn't mean that you're going to use it, but you're increasing your limit which is going to reflect on your utilization of credit. You show that you have $20,000 available, but you're only using 2,000. So see, that gives a 10% margin on the debt that you're using versus what you have available to you. That helps your credit score. So you want to do things to help your credit score. Your employment stability is very strong. Okay. If you don't have good employment stability for the past 2 years, then unfortunately, in most cases, we can't approve you unless you're a college degree professional. I talked about paying your debt down, and then assets. Just have some money saved up. I mean, it's just simplistic to say about the 365 days in a year. You're going to have a rainy day. Unfortunately, a flat tire, your engine goes out in your car, one of your children, they need medical care or something like that. It could be something like dog care. Something happens to your dog, but you're going to have emergency situations where you need additional funds. So when you have assets and reserves, it enhances your chances for approval because banks know these things are typically going to happen over a year span. But when you have this information on your application, it enhances your chances for approval.
Perfect. All right. And then lastly, I know First Horizon got some good stuff going on over there. Tell the folks what are some of the programs that you guys have that can help not just first time home buyers, but maybe people who are just looking to maybe move out of their home, move into another one. And then when you finish with that, let the people know how they can reach you. If they have other questions or if they're ready to come in and submit that application.
Sure. So First Horizon, we have a lot of programs. We have a program for veterans. I'm a combat military veteran myself. For veterans at 100% financing. We have first-time home buyers at 100% financing. A new product that we just recently came out with, and this one may surprise some of you, but for self-employed borrowers, people that are self-employed, and most self-employed people, they have to verify their income with their tax returns. Well, we have a bank statement program. And what this means is we don't have to see your tax returns. We're looking at your bank statements for the past 12 months, and we're going to see how much income that you're bringing in for your business. And we're going to average the income over the 12 months for your monthly income to determine how much house you can qualify for. So there's a bank statement program that we have now for self-employed borrowers to help them qualify. I think that bank statement product is huge, especially for self-employed people that don't like to report all their income on their tax returns. Other programs we have are physicians. We have a physician's product. If you know anybody that has MD behind their last name, you have to be a medical doctor of some kind. But if you're a physician, we do 100% financing for physicians up to $1.5 million. So 100%, and there's no mortgage insurance. There's no PMI, no mortgage insurance on that at all. Okay.
Pays off to be a doctor.
Another key to First Horizon is we don't have all those fees when it comes to applying with us. We just have one flat fee when it comes. We don't have discount points or, application fee, underwriting fee, processing fee. We don't do that. We just charge all customers a flat fee. Some lenders will charge you 1% of the loan amount. So if you're buying a $400,000 home, that 1% is $4,000, whereas our fee is just $1,250. So that's one of the benefits of doing a business with First Horizon as well. We have the grant programs. We have grant programs right now at $5,000 to $6,000 to help you with your down payment. If you already have your down payment, then you can use our grant money to buy your interest rate down and give you a lower monthly house payment. We're also partnered with the city of Memphis with their grant money. The city of Memphis currently has 10% of the sales price of the house available for you as a grant. And that's, free money. The money is completely forgiven after you've lived in the home for 5 years. That's the city of Memphis money. The money with First Horizon's grant is forgiven the day that you close. But we can partner both of those grants together. I just closed a young lady 2 days ago. She got the $5,000 from First Horizon, and she received $12,000 from the city of Memphis. So with that, that's basically $17,000. She got her earnest money check refunded back to her at the closing table because she received so much grant money. We didn't need to use her earnest money. So she got her earnest money check back at the table. So those are some of the products that we have. We also have a DSCR product. This is for investors looking to buy investment property. We qualify your approval for the investment property based on the cash flow. Like if there's a fourplex and each unit is bringing in $1,000 a month of that fourplex, we qualify you based on the cash flow of the investment property. That income is what we use to qualify you compared to your debt ratio. So we have a variety of products. My arsenal of mortgage products, whether it comes to people with no credit score, veterans, first-time home buyers, we have the grant money. We charge minimal fees to do business with First Horizon. We have a lot of different programs. We're partnering with the city of Memphis with their down payment assistance programs. Our grant money is available in Shelby County, DeSoto County, and Tate County. The city of Memphis's grant money is only eligible for the city of Memphis. You
Okay.
cannot buy in Bartlett, Lakeland, Millington, Collierville, Germantown. You have to buy in the city of Memphis. But the First Horizon grant money is available across the board in Shelby County, DeSoto County, and Tate County.
Okay, cool. Perfect. And yeah, you and I actually have a buyer right now that will be closing early next month that is using both I think we're using the Memphis and maybe even some of the First Horizon as well.
Yes.
So yeah, so
Yeah.
definitely there are programs out there definitely, and First Horizon have some really good programs. Actually, just went to a symposium they had that you announced a lot of these things. But yeah, man, listen, Kevin, I want to thank you so much for taking the time to do this with me. Like I said, I just want to inform the folks because I believe you have information, you get knowledge. Knowledge is power. So now people can know what they're doing, know where to start, have people they can reach out to that has been doing it for a while, will look out for their best interest. Because one of the things that me personally I try to do, man, I've been in sales for a long time. I always um, I always believe in taking care of the client first. Once you take care of the client, everything else just fall into place. And I try to align myself with people who do the kind of same thing. And I've seen you gone to bat for a lot of my clients when we thought this was gonna die,
Yeah.
and we kept it alive with doing some CPR on some of these deals.
Yeah. Yeah. I'm very passionate about it because home ownership, it changed my life, and it's changed my life for, years to come. I want to say a couple things real quickly when it comes to renting, because, you know, one of the key things people are going to need is shelter. Whether you move from one city to the other city, you're going to have shelter. So shelter means you're either going to be renting or you're going to be buying. Now, I want to give you some food for thought. If you're renting at $1,500 a month and you rent for 5 years, you just gave your landlord $90,000. I want you to just think about that. You just gave your landlord $90,000. And when you leave that rental property, you're going to leave with nothing. So I don't care if it takes you a year, 2 years, 3 years. I don't care how long it takes you. Prepare yourself for home ownership, because at least when you get ready to sell the property, you walk away with the increase of the appraisal value of the home and you walk away with the equity. But with rent, you walk away with nothing. You don't receive anything at all. So stress the importance, pass this information on to your friends and your family members, your cousins, your nieces and nephews. I've had customers buy homes at 21, 22. It's just so important to have real estate in your name. It's one of the surest ways without risk for you to increase your financial bottom line. And even if you're not going to stay in the house, stay in the house for 2 or 3 years, increase your income, lower your debt ratio, buy another house, and then make that house a rental property. You know, these are just ways that you can really increase your financial stability, because giving $1,500 a month to a landlord over a 5-year period is $90,000. And everyone in America is buying a house. It's just whether you're buying it for yourself or you're buying it for your landlord, but you're buying it for one or the other.
Right,
So
right.
I just want to
Yeah,
say that.
absolutely. But yeah, if home ownership is something you want to be part of, then definitely get the information and start preparing yourself for that. Man, once again, thank you, Kelvin. I really appreciate it. Have yourself a wonderful weekend. Enjoy your Labor Day. I know you're off. People like me are not off, but hey, you deserve it.
It's like I'm off, but I'm not off because I get calls from realtors over the weekend, and you know how flexible I am. So
That's true too.
I
That's
can
true too.
receive
Yeah.
text message anytime. I do want to just say, if anyone wants to reach out to me, my email is Kelvin .martin@firsthorizon.com. KELVIN @firsthorizon.com. You can also text me at 901-412-8474. If you text me your email address, I can email you a link for you to apply online, and then I perform the analysis to determine your eligibility for approval, eligibility for grant programs, and eligibility for your price range of home that you can afford. But feel free to reach out to me. My office location in Memphis is at 4990 Poplar. If any of you have been to Houston's restaurant, I'm in the 5-story building right next to Houston. I know Houston's restaurant is now closed, but I'm in the 5-story building of First Horizon right next to Houston's restaurant, 4990 Poplar, and the mortgage office is on the 2nd floor. So if you have any questions, feel free to reach out to me via text message, email, or you're welcome to stop by the branch from time to time.
All right. Yeah. So definitely reach out to Kelvin. I have questions for him, or are you ready to move forward to home ownership? And of course, at all time, you can always reach out to me on toward all my social media. My number is 901-301-4912. Kelvin, thank you, man. I really appreciate you. And I'll touch base with you next week because we got to close this one out.
I look forward to it, Keno, and thank you
All
so
right,
much
man.
for the opportunity. Thank
Thank
you.
you. Appreciate you. All right. Bye.
Thank you.
Hey guys, thank you very much for tuning in. Hopefully, I was able to give you guys some information that will help you, whether you're looking to do it now or whenever. Home ownership is a great thing, it is a wonderful thing. But again, I just want to provide information. Once you have the information, then you can do whatever you want to do with it. But information is power. Um, Next week, we'll be back on at 4 o'clock next week. I really don't know who my guest is yet, but by Monday or Tuesday, I will definitely have somebody sealed in, ready to go to once again provide you guys with information about the whole real estate real estate world. I think what I'm gonna try and do is have one of my first time home buyers be on and really tell you guys what it was like going through the process, the ups, the downs, and what it felt like in the end. Hey guys, once again, thank you very much. Enjoy your Labor Day weekend. Please, please, please be safe. Do not drink and drive. Call a Uber. Whatever you got to do. Don't get in trouble. Be here for us. Be here for your family. And love you guys. Take care. Bye bye.